Good afternoon, ladies and gentlemen. Welcome to today's stock market brief show. I find it very interesting that when we were selling off right into around these areas, my X feed, social media feed, started lighting up, basically saying that the lows of the market, they weren't in. And I want to take you through kind of a brief history of the videos that we've been showing and posting. And you can always go back and watch them, because now I'm not hearing that anymore. Actually, that crowd seemed to fade away, and now we're looking for going year-to-date flat and potentially new all-time highs after this market came up. So I want to walk you through some of that, and then I want to dive into what it is that I'm actually doing right now in this moment as far as getting exposure into these markets and individual names, and then how I've been handling this volatility as well. I'm going to talk about market conditions, the updated expected moves, and obviously a lot. If you've been watching this show, hopefully throughout this volatility, it's helped you prepare for it. I mean, we can date back over here when we were at basically highs of the year when everybody was bulled up. We started really kind of honing in on that a massive bull trap could be forming in the markets. Now, we didn't know that we're going to fall into a 20% decline at all, but the possibilities of that were starting to, like, a lot of ideals started to load really kind of on the more bearish aspect of things. Over here, we were starting to kind of dive in that uncertainty was really rising in the markets with all this tariff stuff, and so was the opportunity. And we started to really hone in on what specifically to look for to feel a little bit more confident to start buying into the market. And it wasn't until this day right here that it really started to stand out. On Twitter, I started posting, you can go to my Twitter and see it, or even the video back over here, on this specific video, that the next move could catch traders off guard. And the thought there was simply put that everyone started getting very loud that the low was not in. And my thought was the pain trade, I don't think is lower. I think it's going back to year-to-date highs, and a lot of traders actually missing on that specific move. And from that point, right, we'll look at the chart, but we had 9 straight up days, minus obviously today broke that streak. Now, as we kind of continued on, this was the first confirmation. The market confirmed it. That was the follow-through day, the very first official one in the S&P 500 that we were been watching. And when that happens, it's normal to want to get some exposure into the market, just in case if, hey, this actually is the bottom. Now, when you get a follow-through day after a correction, they only work like 50% of the time, but 100% of the time, they happen coming out of every actual bear market. And you don't know that the bottom's in until hindsight, right? We won't know the bottom's actually in until what? Until we break to new highs. And then we say, okay, yeah, that was the bottom, right? We'll look back through history. And then as we started to kind of trail up, we talked about CTAs. So we're going to give an update on the CTA charts and how not to really underestimate their power, because it could drive the market higher. And we talked about vol control funds there too as well. And then now, as we kind of creeped up a little bit higher, we started to say this is where traders can get it wrong, where they end up throwing in the towel. They get exhausted, whether they missed the move or they came back to being break even after a big bout of volatility and they throw in the towel. Well, since that point, we kind of just doodle around. We had a big down day here, but then it reversed, closed at the highs. We had some follow through and a little bit of a pullback today. So in today's video, I kind of want to hone in and prepare people for the potential for a pullback here in the markets, but not to really necessarily get bared up. So I want to revisit the key levels that I'm looking at and just revisit kind of why I might think that a pullback's happening. Well, we had a very strong move, right? We still have a series of lower highs and lower lows. You might be able to actually make the argument that we have a higher low here and a higher high here, and that's definitely true. But so a pullback even down to this range, I don't think is really, I mean, that would scare a lot of people, right? If we pull back like this, well, we're talking 6-7% or so, and as the price actions really kind of moving in this parabolic trend up, right? We're kind of getting this, like, think of it as climbing a mountain, right? The higher you climb up the mountain, you start to lose air and you got to come back down, right? And catch your breath. Well, as the market's been pressing higher here, you can also see that the volume down here is starting to dry up as well. So this just tells me that as price action's kind of getting tighter and tighter, so is volume. That means we're probably going to see in the very near future a large volume outsized day. And that doesn't necessarily mean that we have to break down. We could see something very bullish happen, where we have the Fed coming out and we could see a pop up to the upside. But I want to prepare people for the potential for a pullback now because of some of the signal charts, at least for the S&P 500 and the key levels that I'm honing in on. But once again, I'm not looking to short this market. I don't care if it goes down and retests those lows. I don't care. I'm looking for very strong stocks in which I can trade. So I'm going to show you some of those names that if you're in the Patreon group where you can sync your Discord up, right? This thing right here, I have it in the pinned comment. I have a bunch of different benefits. I don't want to talk too much about it, but I want to show you specifically some of the charts that I posted and some of the trades that I took during this. So this is LRN. This was recently, right? We're testing new highs. This is a year-to-date chart. It was holding up really good, right? Very good with all the volatility that's happened in the market. And those are the type of names I want to hone in on. But more importantly, not only those names, what do I look for? I look for the price actions to start to contract. So we broke out, saw a nice big pop. I sold a little bit into it. I locked in some of those gains. And if you don't believe me, there was the original post here that went into the trade ideas section. eBay was another one, was posted on this day. It was up about 2.5% today. I got a little position there, and it's been holding up rather well. Earnings is out of the way too, which is nice, right? And if we come down, it stops me out. I really don't care. So we posted that. A couple other ones from a while ago. This was 417. Like what I said here was I wasn't posting many trade ideas because of the market conditions, right? There's two things that I look for market conditions: the gamma flip line and the direction of the 5-day moving average. And when we're in negative gamma, I don't really swing trade too frequently. I focus significantly more on day trading and shorter term trades, like 1 day to intraday to maybe 5 days. And if something sets up and if things start to align, I'll start to look at individual names. Like we found TEM over here and app, and both of those, right, saw a nice little pop from that contraction, right? We contracted tightly, offering up a good risk to reward, and we popped. Did I know we were going to pop up here and test the year to date VWAP? No, I didn't know, but I got to sell a little bit into it. I still got a little bit, and maybe perhaps if it dries up a little bit or we get through earnings and it still looks good, maybe I can add in and reset it up. TEM also, right? This one's a very volatile name too. This one has earnings. Bam, we saw a big shot up, and these aren't small moves. We're talking like from 40 to about $54 a share. So you don't need large positions in these, right, to get some of the beta, which, by the way, I don't take big positions in these type of names. And now, like, one of the more recent ones is Tesla. I'm really kind of keying in here on Tesla as we're just kind of consolidating underneath this year-to-date volume weighted average price. So I'd like to maybe see potentially a little bit of a shakeout before kind of heading up higher. But even if not, we're contracting, we're consolidating here. This could be the potential for a double bottom, triple bottom, whatever you want to call it. But we really haven't seen the close above this key area, about 296 to 300, that zone in there that I prefer to see. Yeah, some nice consolidation and then a breakout on some stronger volume take place. So I've been honing in on that one, getting a little bit exposure and seeing if maybe we get a little bit of a pop there in the markets. And if you don't know this, I do verify all my trades. I go through the United States Investing Championship. I don't go there to win. I go there just because I do this for a living. I post these videos, and I want people to know that I'm not just talking out of my bud over here, actually trading what it is that I see. And I fully believe in the way that I kind of present this stuff. And year to date right now, at least of May 2nd, I had a little bit of an update today, nothing crazy, like a couple basis points. It was pretty much flat, we'll call it, but 19% year to date. And this is not dealing with the volatility in the S&P 500. This is how I kind of prepared myself when things started to change in the market. I focused more on day trading, and for the first time, really, I really honed in on a strategy that worked very well for this type of volatility. And I hopped into some of these prop firms where you have to follow their rules and so forth. And since April 23rd, when I got funded, I've been able to accumulate additional funds there through this specific prop firm here. So since February 23rd, when I was able to make money, I've so far generated $4,400 there. And then in my larger a prop firm account, a separate one, near $30,000 from I think it was in March when we originally flipped under the gamma flip line. And I think I've had 3 down days so far there. And that's not to say, oh my gosh, this guy's so good. No, it's literally been a slow grind. Now, I haven't taken any money here because I haven't qualified for my payout yet, which is because I've been going so darn slow. Typically, people will try to rush it, but I think I've been trading a total of 30 active trading days. And if everything kind of follows the path that I've been doing, I'll probably get my first payout by the end of this month, maybe a little bit sooner. So that's what I've been doing. Those are the things I've been looking at. We'll get into the key levels in the S&P 500 because I am really honing in, ready to buy more of that product, but not at these levels, right? I bought them lower and I sold them higher, and this could very well be a bear market rally. I don't know yet. Nobody does. Some people might call it a bear market rally, but it could be the start of a new bull market, right? I don't know, okay? You can see here that we haven't had 9 consecutive up days since what? Since 2004, November of 2004. I went and looked at that chart, and the market was all over the place during that time, very choppy, very sideways, and then we had this big burst of energy outside of it. If I continue on, we look at like retail flows. We just hit a record of retail flows here, on record at least. So it seems like everyone's pretty bulled up. So is this the first time that maybe retail is starting to get it right, or is this just a sign that's saying that they're trying to hope and pray that everything goes good in their direction, and this is actually a negative sign? I don't have the answer for you yet, but I will with hindsight. You can look at the smarter investors, right? The GOATs, Warren Buffett, who got updated on his cash pile, and this has hit new records over here too. So as kind of time moves forward here, you see the market recovering. People are getting happy. It's flat year to date for the most part. But then you see the GOAT himself still increasing his cash pile here. So what do they see, right? What do they see? I couldn't tell you. I couldn't tell you that answer. I'm just telling you how it is that I've been navigating and how I'm going to continue to navigate it. We saw a big flush down lower on the S&P 500 weekly chart. We talked about this bearish piercing pattern over here, right? It's a 2-bar reversal pattern. And when you get this extended from the 5 EMA, we showed a chart back then too, showing it's only happened like 6 times in history getting this disconnected. And we talk about the rubber band, right? If the rubber band, the further it stretches out, the likelihood of it snapping back is increasingly going to increasingly happen. So when we got down here way disconnected, right, we snap back. When we got down here, we snap back. And then when you get like way above it, right, you snap back here too. And now where are we, right? We're floating, we're above it. There's not many times where we're disconnected for multiple weeks from it, but the chances are we'll connect for that in the near future. And right now, right, this is just day 1 of the trading week, down 64 basis points, rather unchanged, nothing to write home about. The NASDAQ 100 on the daily time frame, you can see that we came back in to test that 200-day moving average. We came back once before and we were rejected. We have a 100-day moving average that's sloping down in confluence with the upper Bollinger Band. And then we have the 50-day that's also averaging down here too. So what does this tell you, right? Above it, below it? I don't necessarily care. Like a lot of people are like, oh, it's nothing bullish ever happens under the 200-day. That's people copy what Paul Tudor Jones said with that saying. My thought here is the direction of it matters significantly more than whether you're just above it or below it, right? So the direction of it right now is rather neutral. The longer we stay below it, it's going to average more of this data and it'll start to trend down. And that right there to me is much more of a bearish sign from a longer term perspective. Now, from a medium term perspective, it is down and it is declining. So that to me is not the greatest sign for medium term. It's going to take a while for this to flatten out and to turn back up. So if the S&P 5 or the NASDAQ 100 comes back down, right, comes down, flushes, boom, 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 right, maybe perhaps over a course of longer consolidation, we can get this up. Or fires up and then we start to turn faster, I'd still be looking for the pullback and consolidation back there. And then you have that 100-day. If I look at the SPX, pretty same story, but we haven't back tested the 200, and you have the 100 declining, 50-day declining, and this one's just leveling out over here, telling us that the longer term trend, the Godfather average over here, the 200-day, is just neutral to flat. So there is no trend right now. Means that you got to be patient. You got to wait for the right setups. The bigger picture here is on the monthly chart, and we've shared this multiple times. I shared this also with a lot of RIAs when I was out in the NASDAQ and to get opinions and stuff on it. And when we were at all-time highs, it was kind of like it's a little different area, different time, whatever. And I kind of just stuck to this because I've been sharing it for a while now. And I always found it interesting that typically, people think cutting rates is more of a bullish aspect. Well, it hasn't been throughout history, especially when you have a yield curve that's inverted, right? And then we start to uninvert, it starts to steepen, then you start to cut rates at a rapid rate. And it's not until you really slam them down that you start to see some sort of a bottom in the markets. And you look at the dot-com bubble, I want to remind people, right? So we fell 23%. We went into a bear market. It's not no 50% or 35%, but still, that's a bear market. And if you go back to the 90s going into 2021, do you see this little market, like little hiccup right here? That was actually 23%. That was down 23%. And then we went off to new highs before actually seeing a bubble burst there, which I found to be very interesting. We did see a little bit of a pullback here down to here. That was like 13% of a decline before hitting new highs. And then we went into the financial crisis. Now, obviously times are actually a lot different, and we know that, but what's not different is the Fed looks like they're in a rate cutting cycle right now. And we have the yield curve that's kind of was uninverted, or sorry, that was inverted. We uninverted and then we inverted again, and we're starting to come out kind of similar to here and kind of honestly similar to over here in the financial crisis. So if this starts to steepen and moves up, I mean, we got to be open to the idea that there can still be pain, but the market's still holding a positive structure right now. So we have to be open to the idea for it to continue to go higher. You can't just be like, the market's going to crash, right? So that's why it's such a balancing act. People ask, are you bullish or are you bearish, Mike? And the answer is always the same. It's like, yeah, I'm bullish and I'm bearish. Think about time frames, right? Think about certain assets. You can be bullish one asset, bearish another. You can be bullish on a daily time frame, but bearish on a 15-minute. Like, it's not so black and white that people want it to be. They crave certainty in a world that is uncertain. And I feel like if that's you gotta like step away from that, because you're not going to get certainty ever. And if you are searching for certainty, there's going to be certain gurus that are talking with power and provocative language to make you believe that they know exactly what's going to happen. But the problem is, are they going to tell you when they are wrong? Are they going to tell you, say, hey, if this happens, then I'm wrong? And that's the thing, is they typically don't, right? To be successful in this, you need to plot out paths for potential if you're wrong in a situation. So some people will comment, oh, the market's going to all lows or it's going to all-time highs. Okay, cool, right? But what are you going to do if you're wrong? That's the most important aspect of making a call, is what to know what you're going to do if you are wrong and where you are wrong. If you take a look at I went on a tangent there, but if you look at the probabilities of a Federal Reserve cut, this is the Fed Watch tool. We have 1, 2, 3 going into, is that 3 or 4? Wait a second. We got 1 cut, 2 cut, 3 cuts going into the end of the year. I thought it was 4, so maybe I have to update this, or change. But you can see here, since we've gotten some more macro data out, it looks like the Fed here on May, which is coming up right around the corner, which could potentially bring in some volatility, about a 97% probability that we'll keep rates where they are. And we'll look for guidance during that press conference or whatever they may come and say here too. And you can see here that is going to be on Wednesday, May 7th. They'll have the interest rate decision, which likely is going to remain where it's at. We'll see. And then they have the press conference that maybe can give us some guidance on what to look for there in the future. Now, I do find it interesting when I pair this chart, how we went into recessions these times after hitting all-time highs. I do find it interesting because there are some commodities that really are sparking growth concerns. Like, look at oil. Oil was, a few days ago, I think it was actually a few videos ago, we were talking about how if you were bearish anything, this could be a potential play. And this thing got completely hammered to retest these lows. These are not small moves in the price of oil. So oil's been coming off a lot. And why I find this to be important is typically the yields will follow oil, and that's kind of been sporadic here. But you can see this is the black line is oil and the candlestick chart is the 10-year yield, and you can see they both went down over here. But now, as we went down lower, we've seen a little bit of a spike up here. So I'm just kind of wondering, is oil still leading the main path here? Is the 10-year yield going to start to come off? Are we going to see growth concerns, or are we going to become into a more sticky kind of environment here? I just don't think we're really in a high inflationary environment. Maybe more towards the end of the year, we can see more of like a stagflationary environment. But oil coming off is one of the bigger contributors to inflation. And like I said, that's been coming off. So very, very interesting area. And oil's coming off significantly like this, which would spark obviously some concerns. Then you have gold, which is a more safe haven asset, going up 2.81% today after a pretty significant pullback. I would say a very fast pullback from 3,500. It doesn't look like much on this chart, but we're talking 300 points there in gold, which is a typically lower volatile item, and 3,500 to 3,200 in a short time is a pretty sharp move. Then again, we saw a sharp move up and then a consolidation. So the sharp move up was more significant than this move down. And we're seeing a follow through today as price actions still putting in higher highs and higher lows. Now, the reason why I say prepare for a potential pullback, whenever that may be, is because now we're starting to get the signals are starting to get a little bit more frothy to the upside. And I like to get this ahead of everybody earlier, because what's the point of me showing it after the fact? But the same thing happened here when the market was selling off. Everyone thought the world was ending, obviously, right? But guess what? Right. Everything was becoming incredibly oversold to levels that we haven't seen, like maybe a couple of times throughout history, actually, on various charts. And so we try to prepare people for the possibility of a market to bounce. And hopefully that helps people navigate this. And now, right, on the flip side, we're starting to move up, and we're moving up fast. The bullish percent chart for the Nasdaq composite, it's not like an extended reading up here, but the RSI is getting back into an overbought condition. And once again, overbought can remain overbought. So what I like to do is I like to look for potential divergences to form like that in these products, because that kind of gives me a little bit more of an edge here. So we'll see if that actually takes place. The BP-SPX chart, this one is cranking up above 70. And I've seen many times that when you're above 70 and you cross back below 70, it actually increases volatility in the market here too as well. You can see we got Like for example, above 70 and then below 70 here, the market went down. Over here, I think we went down a little bit, and then this kind of went from here sideways, up, down, right? A little bit of choppy. Over here, same thing. Boom, we saw this little slippage. So now we're above it. RSI is getting frothy. I like to see the divergences, but we are creeping up into the more frothier levels there. The NYSE bullish percent index, another one, right? Moving into that overbought condition as we've saw this sharp pullback back to where the darn near all-time highs in the market. You have the INDU also kind of coming back from a very oversold condition back into more of an overbought condition. The old full indicator, I found this to be interesting that this is much more lagging indicator, but we did have that sell signal over here where you have, this is by the way, the Nasdaq composite divided into the put to call ratio, and that's a very crazy line, the purple line in the back. So we apply a couple EMAs to it and look for crossovers. So when the green line crosses under, it's your sell signal. It's lagging, right? And then we sold off, right? It actually kept pretty good, and now we're bouncing back up. And this actually still hasn't had a bullish crossover yet, so it's technically still on a sell signal as it stands right now. But I do want to remind people, like even right here, it ran up, it came down, and then we got a buy signal over here. This was the low, and then we went up higher. So like I said again, it is a lagging indicator. But what happens here if the market kind of presses higher, but these things start to actually come in and go back down, could be an indication that there could be some more sell side. Now, what are the levels that I'm paying attention to on the S&P 500? Because I'm not really looking to buy the S&P 500 and getting more into the ETF space here, like at this level, right? I'm not interested. I'm more interested in various stocks that might have a higher beta that have been contracting. So that's my focus now on swing trading. But here, I would say I'm honing in on the lower weekly implied moves. So as it stands right now, right, we have about a $13 weekly expected move for the SPY. So if we come down to these levels, I'll give you the exact level in a moment when we look at it, intraday chart. But I might add a little bit here, or if we undercut it a little bit, maybe I'll start the position of building with the hopes that we actually dip a little bit further. But I think that would be the good start to start building back into like an ETF position, because I'm looking for that type of a pullback. Now, if I show you some of the volume weighted average prices on this chart and overlay a key area, the key area I want to highlight is down here. This is the main area that I'm bullish above. This is the higher low, and it was the first follow through day over here. And I really don't like these to get broken down beneath. You can bounce from these levels, but typically when you break them, that's not a great sign for me. So like I said, if we come down to these areas, maybe I start to look to adding, and it has the ability to come all the way down here and for me to still say, yeah, I'm bullish. But then on the flip side of this, I'm going to be looking at these signal charts and saying, hey, are we oversold again while everyone's panicking? That's how I would approach it. Now, as far as the volume weighted average prices go, we're right there at the year-to-date volume weighted average price. That's that purple one right here. Okay, so there's that. We have the all-time high VWAP. We're above that. So that's also really good. It's basically saying after all this volatility, the average buyer is actually positive here from the all-time high. That's a good sign. So if we pull down into these areas, we'd be retesting that. And then this higher low over here, and this low, you can see this low would go to there, and then the higher low is right in this area. So just in this area, right through here, we have the lower weekly implied move, we have the all-time high VWAP, and we have the prior swing low that we have yet to test. And that I feel like could be likely to test. So I would be looking to initiate a potential position within kind of the starter position with the hopes that it goes down further, the starter position in this area here. But during this process, even if I don't get it, I'm still looking at individual equities that have set up, like the ones we just described earlier on the episode. So that would be the kind of pit stop one I'd be looking at. And then pit stop two, right? We still have an open weekly implied move, or month to date, right? Month to date upper here, month to date lower down here. And this is for the month of May. So if we were to come shockingly down here, whenever that may be, next week, the following week, whatever, I would be looking at these areas for the pit stop two to potentially build in. And if it doesn't come there, right? So we broke down, oh, you're wrong, see? And then it turns back around, I can always look to add back in through, right? So I'm not in a huge rush by any means. I'm just trying to navigate this the best I can. If you look at one of the market conditions, I look at the direction of the 5-day moving average. We're above this, we're above it, and we're trending higher on SPY, Qs, IWM, DI, AXI. So that's why I'm starting to add exposure back into the market amongst obviously the gamma flip line, which we'll talk about here. Now, if you're interested in the intraday trading, right, you can take a look down here. This is the lower implied move. We have 558 0.67 down to around 557.07. Now I find this interesting because these gaps are starting to widen. So the daily implied move based off of options actually narrowed a lot, but yet implied volatility and even the VIX is telling a different story here, right? VIX is the implied volatility, but it's telling a different story that there's still a lot of volatility packed. So sometimes when you get these narrow ranges, I've even seen traders take various type of option strategies to play into one of these levels. And I didn't set that up into the close. You want to typically do that more towards the closing bell or within around 30 minutes. But the thought there is that you're going to break the expectations of the market. We'll see if that's actually going to be the case. And then the weekly implied move going into this week, we have 553.68 to the lower, 579.84. If you're in the Discord, or if you signed up through Patreon and you've sunk your Discord up, you get access to the weekly implied moves for all the products that I track, which are the bigger index products and some of the other ones too. And I do have some new stuff that I plan on implementing into there. And if you're interested, it's $9 a month. You're not going to find a service that's lower. Well, you might find one that's lower, but I add in a lot of stuff into that thing for $9 a month. If we take a look now at the gamma flip line, we're pretty much gamma positive to gamma neutral, right? We're at about what? We're basically on the gamma flip line. And when we're on the gamma flip line, this is typically where volatility reduces, but we're not really seeing that quite yet. So the last 3 days, we've been in positive gamma. So cool, check for the bulls. I like that. That means volatility can typically come in. You can see here, the gray shaded boxes are highlighting the areas when we fall under the gamma flip line. And it's basically protected me from August. It's protected me from March. And then we had some hiccup pops over here too as well, which is kind of like whatever. But these last 3 days, we've kind of came off a little bit in volatility, but we're kind of trading around. Now, what I find interesting here is that while this is taking place, the VIX futures curve is still in backwardation. And that to me is like, what's going on here? And this tells us that we got problems here and now still. Like this, you want this to start changing and it just hasn't done so. So I'm a little on edge, but I'm still open to the idea of adding exposure in the good stocks and the good setups, but then being more patient for the proper pullbacks and building into positions for an S&P 500 position, for a Nasdaq 100 position, and so forth. Because you're going to find various names within there, right? It's the market of stocks. The stock market is a market of stocks. So you'll find various names. The update on the vol control funds, this makes sense to me, right? This started to spike up and stabilize a bit, and that's happened as soon as we really crossed back into positive gamma territory there. If you look at CTAs, and CTA positioning as well has picked up pace a little bit. So I'm looking for some stronger levels to be broken in the S&P 500 to really see these start to really kick in. And I think that that's a possibility. So what I really like to see is the market to pull in a bit. And then obviously the CTAs to really start to step in the very near future, which can add more fuel to a potential rally. Till then, I'm just navigating the market as best I can, looking at individual setups, being patient as the market is still as market has been and will always be an uncertain environment. I focus on what I can control. That's what I buy, when I buy it, how much I buy it, and then when I sell it. That's all I got for you in today's episode. Hope it helps out, and I'll see you on the next.